We have a very critical, time-sensitive update for all Tesla stock investors, so we're going to go ahead and get straight into it. First off, with the breaking news for Tesla stock today, and then we're going to break down a massive catalyst coming in after hours and how this could affect Tesla stock. Tesla has now leased over 1 million square feet of warehouse space in Kyle, Texas. This is about a 40-minute drive south of Giga, Texas. The new lease was announced not by Tesla, but by Travis Mitchell, mayor of Kyle, Texas, during his State of the City address on Tuesday. According to Mitchell, Tesla has leased 3 warehouse buildings at the new Kyle 35 Logistics Park development, just 33 miles away from the company's headquarters in Austin. Mitchell explained that Tesla will initially occupy about 1 million square feet of the development. The real estate insiders told the Austin Business Journal, I don't know if you guys heard that thunder, but that was quite loud, Tesla could eventually lease the entire industrial park, which totals over 1.4 million square feet, spread among 5 buildings ranging in size from 140,000 square feet to 475,000 square feet. Tesla will use all of that space for storage and light assembly, Mitchell revealed during his address. Light assembly could be putting rims on tires, it could be making bumpers, it could be making some of your odds and ends kind of parts, maybe to simplify the process at Giga, Texas. And storage is obviously storage. This is obviously great news and really flies in the face of what the bears are saying for Tesla next year. The bears are expecting Tesla, or really just Wall Street in general, you don't even have to be bearish. Wall Street is expecting 27% delivery growth and 29% EPS growth. I want to ask the question, why is Tesla expanding so rapidly if 2024 is expected to be the slowest rate of growth in Tesla's business history? That makes no sense to me. Tesla has also apparently been in talks with Ontario, Canada about investment opportunities for years, government records show. Tesla and Ontario officials across multiple government departments met and corresponded about investment opportunities dozens of times in the past 3 years, Electric Autonomy can exclusively reveal. Documents show that Ontario officials ranging from the Minister of Economic Development, Job Creation and Trade, Vic Fedeli, the Minister of Energy, Todd Smith, and many other high-ranking individuals were all in regular contact with Tesla's decision makers, including one exchange that involved Tesla's CEO, Elon Musk. Quote, I wanted to forward an article that announces the intention of Canada to subsidize EV battery production, reads the December 2022 email sent by a commercial officer at the Ontario Trade and Investment Office in Dallas, Texas, to 3 recipients, one of whom was Elon Musk. Just another indication of the commitment of Canada to become a hub for EV production in the future. It's unknown if Musk replied. See, I'm not going to be the one to argue if investing in Canada is the right move or not. Yeah, that's a tough call, but it does highlight my prior point. Tesla is looking to invest everywhere, basically as fast as possible, in many different countries at the same time. It does not look like, according to these reports that we are reading, Tesla's business is expected to slow down at all in 2024. And Wall Street has assigned the slowest growth rates in Tesla's publicly traded history. That's why I think Tesla's the easiest money on the markets today. Tesla adjusts the supercharger rates and adds off-peak hours in Canada. Tesla recently switched to billing customers for the amount of energy they actually consumed from the supercharger station rather than the time that they were at the supercharger station, referred to as kilowatt hour billing, with most superchargers at around 50 cents per kilowatt hour. With the change, we speculated that Tesla would also soon add off-peak rates, much like they do in the US. And on Wednesday, the automaker did just that. Interestingly, however, The off-peak rates are only at select superchargers in 2 provinces, meaning that at your peak hours when the most energy is being used, that's when it's going to be a little bit more expensive. Vice versa, if you're charging at 2 o'clock in the morning or 1 o'clock or midnight or whatever time that not a lot of energy is being used, you're going to get slightly cheaper rates. Also in the news today, Tesla is installing a new supercharger in Tarragona, Spain, and it is going to be a V4 supercharger. This would be the first V4 in Spain and one of the first 10 V4 superchargers in the world. Tesla has officially opened its first ever supercharging station in Malaysia. This features 8 supercharging stalls. Tesla has sent out another email in the US reminding people that there is a $500 Powerwall rebate available until October 31st, 2023. Tesla says, quote, when you install and register your system by October 31st, 2023, you can receive a $500 rebate for each Powerwall installed. Tesla has changed the video for the advertisement of the Model 3 on their website, and it changed it up quite a bit. And now what you can see right here, instead of saying you can test drive the Model 3, it now says starting at $32,740 after the federal tax credit. And now for your daily dose of the Cybertruck. We've seen a lot of Cybertrucks, either at night or wrapped in camo wraps, but it's pretty rare that we're seeing a Cybertruck this up close and personal in the daylight and getting some very clear photos. And let me tell you right now, it is becoming a real head turner every time anyone sees the Cybertruck. They're asking, what the hell is it? They don't even know who makes it. They don't even know what it is. I think this is going to be like a driving billboard for Tesla every time a Cybertruck is spotted on the roads. Also in the news today, the Tesla Model Y is the fastest selling 1 to 5 year old used EVs. The average days on market is 47.6 days. The average selling price for a used Tesla Model Y is $46,000. The second fastest selling used EV is the Nissan Leaf, and that has 51.3 average days out of market and $20,000. The Tesla Model 3 is number 3 at 51.8 days on the market and selling for an average of $35,000. Also in the news today, Lucid Air's price cuts are working and sales are on the rise, according to Lucid's CEO, Peter Rawlinson. He said that Lucid saw an increase in sales and product interest following the price cuts applied earlier this month. And he does go on to say that these were about the prices that these vehicles were originally going to be launched for before they were forced, quote unquote, forced to raise prices just before the launch of the Lucid Air. Also in the news today, Polestar achieves 150,000 EV production milestone. This mostly has to do with the Polestar 2, which entered production in 2020 as the brand's inaugural volume car and has now surpassed the milestone of 150,000 units manufactured within a span of 3 years. For context, last quarter, Tesla delivered about 150,000 units every single month. So still in the context of Tesla compared to competitors, there is no competition. Let's now get into the biggest events that are happening in the markets today and what we can expect from Nvidia earnings and how this could affect Tesla over the next coming days and weeks. Take note, this video is posted at 3 p.m. So if you are watching this video within the first hour of posting, well, you're going to be able to get a heads up on Nvidia earnings, and this could help you make money. If you want to come trade with me, trade with us, the rest of the community. Every time I make a trade, I send out alerts. Link down below in the description of this video. Mortgage demand from homebuyers drops to a 28-year low as interest rates soar. This data came out today at 7 o'clock in the morning. Last week, the average contract interest rate for a 30-year fixed-rate mortgage with conforming loan balances of $726,000 or less increased to 7.31% from 7.16%. Applications for a mortgage to purchase a home dropped 5% for the week and were 30% lower than the same week 1 year ago. The adjustable rate mortgage share of applications increased to 7.6%, which was the highest level in 5 months. U.S. August S&P Global Services Flash PMI came in at 51.0 versus 52.2 that was expected. And as you can see from this chart, manufacturing continues to decline, services starting to decline, as well as the composite output. Now, the prior reading was 52.3. For context, just so you guys know, anything under 50 is seen as contractionary. Anything above 15 or 50 is expansionary. Now, what this means, or what this is basically a survey of business owners that ask them their opinion on how their business is doing. If they are expanding, if they are seeing good numbers, things of that nature. So the lower this is, the worse the economy is presumably doing. The higher, the better. So this number missed expectations. The manufacturing came in at 47, so in contractionary territory, versus the estimate of 49.3. You were actually expecting a jump on a month-over-month basis in manufacturing. The prior reading was 49, so you were expecting this to increase to 49.3. It actually came in much lower than that at 47. The composite came in at 50.4 versus 52 for the prior reading. U.S. firms were more upbeat in their outlook for output over the coming year in August. August data indicated only a fractional rise in employment. Also, what is positively affecting the markets today is this, something that is quite crazy. The U.S. job growth wasn't quite as strong as it appeared last year after government revision. Yeah, the government on Wednesday revised down its tally of total employment in March 2023 by 306,000 jobs. The change mostly means that there were about 300,000 fewer job gains from April of 2022 through March of 2023 than first estimated. So this is positive for the Fed's mission of constricting the job market. So this weakness in the service flash PMI from S&P Global, well, it's causing the 2-year Treasury, which is very much sensitive on Fed policy, to drop about 9 basis points today, now sitting at 4.95%. So markets are opening up to the idea that maybe we will get Fed rate cuts a little bit sooner based off of this data that came out today. You're also seeing the 10-year Treasury yields, they are falling by almost 13 basis points. That is helping to fuel this rally that we are seeing today. The Nasdaq is soaring 1.86%. Nvidia is up almost 3%. Tesla is up over 2%. And just really everything is doing well today. And if you take a look at Twitter, well, Genevieve Roche Decker, CFA on Twitter, says Nvidia earnings tomorrow is the Super Bowl of the stock market. Douglas A. Boneparth says, if Nvidia misses earnings, the earth will explode. High Yield Harry says, realizing my retirement completely depends on Nvidia's earnings today. And there is a picture of, I forget, what's his name? Josh from Drake and Josh. I forget what his name is. Neither here or there. But long story short, you need to see good numbers from Nvidia. Nvidia's expected numbers is revenue around 11.04 billion. On the higher end, you're expecting about 11.1 billion. This would be 64% growth year over year. EPS is expected at $2.07, up 690% year over year, and the expected move is 9.8% positive or negative. The biggest thing that will affect Nvidia's earnings and really how Nvidia trades following earnings is guidance. Investors don't care about what happened 3 months ago during the last 3 months more than they care about what's going to happen over the next 3 months. That's the simplest way to think about it. Who cares if a business did good last quarter if they're going to do bad next quarter? Nvidia is probably not going to do bad, but markets are expecting 12.56 billion for the guidance number for next quarter. If this number comes in light, not that good, maybe 12 billion, you're going to have a problem. If guidance comes in at 15 billion or higher, you're going to see a face ripper rally coming tomorrow. And based on some of the positioning we are seeing in Nvidia, some of the analysts raising their price targets as high as $800 within the last couple of days, it looks like certainly Nvidia is more likely to surprise to the upside rather than to the downside. About 80% of option activity today has been calls bought in Nvidia. So markets have already made up their mind. I think this is very much a dangerous game, betting on earnings in general, and especially a lot of money if your portfolio cannot handle a loss. But odds are the expectations are too high. So Nvidia really needs to give you a $15 billion guidance number or higher to really see the stock gain another 20 or 30% from here. If you come in around analyst expectations of 12.5 billion for guidance, that's not going to be good enough. Even 13 billion for guidance. I wouldn't expect a crazy big rally. I wouldn't even expect a 10% move off of that based on where expectations currently are for Nvidia. Now, as I said in the last video, if Nvidia does give us a really good guidance number, I would expect Tesla stock to rally higher than your pre-earnings rally. So really break out above $300 per share, make our way up to about $350. That would be my expectations if Nvidia gives us a 20% rally after their earnings based on good guidance. To the contrary, if Nvidia does not surprise us and we get an upside move, if that move happens to be a downside move, well, Tesla probably going back to about 200, maybe even lower than that. But I think this is more of a just broader market event. It wouldn't be just Tesla that would sell off. It would be everyone, every company. It would be bad out there. Okay? So keep that in mind. Nvidia earnings is like what we read on Twitter, the Super Bowl of the stock market. My personal opinion, I am leaning more towards a downside move following Nvidia's earnings. But again, it's one of those rare earnings where you really don't have any insight. It's just going to be a very volatile event. I don't have any clear evidence to support a miss on earnings or a miss on guidance, and I don't have any real evidence to suggest Nvidia is going to have great earnings and give you a huge guidance raise, besides some of your analysts raising price targets to $600, $800 just within, the last couple of days. That is pretty suggestive that things are probably going to be good with Nvidia. So keep that in mind if you are trading this or you are trading some sympathy trades to Nvidia's earnings, you probably would want to play both sides. So that is going to do it for this video. Let me know what you think about Nvidia earnings and all of the breaking news that came out for Tesla stock here today. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. My name is Michael Tyler. Thank you for joining me today, and I will see you in the next one.